Welcome, my name is Yuri Tsihush and this is Daily Report from FIBO Group, and we will speak about Thursday. Thursday's trading day will be quite significant for traders. Market participants will concentrate their attention on the euro and New Zealand dollar. Beginning of the Asian session will be under the influence of official interest rate from the Reserve Bank of New Zealand. On this news, we expect high speculative activity on New Zealand dollar. The reason is that the rate has been rising for the last 6 months. The interest rate of the Reserve Bank of New Zealand is an instrument to control inflation in the country. High interest rate decreases inflation, and low create the base for its growth. Trading activity in 1895 points we can see after the release of these statistics. Andrew Masters, an expert from FIBO Group, is saying,
"Hi traders, I'm Andrew Masters from FIBO Group with my report on the New Zealand economy. The Reserve Bank of New Zealand meets again next week for a decision on whether to raise interest rates. Although they could raise rates, it's no longer the absolute certainty it was. The two indicators causing doubt are surprisingly sharp drop in wholesale dairy prices and a weaker than expected inflation figures, easing pressure on the central bank to continue raising borrowing costs and sending the Kiwi dollar lower. The Consumer Price Index rose 0.3% in the 3 months ended June, taking the annual increase to a lower than expected 1.6%, against analyst forecasts of 1.8 and 1.9%. Analysts expected a higher number due to the $40 billion rebuilding of earthquake-damaged Christchurch and the strongest immigration numbers in 11 years, which added pressure to prices. Meanwhile, nobody's ruling out the possibility of further dairy price falls, particularly because buyers have the ball in their court. Economists were lowering their forecast for Fonterra's payout to farmers, and that could mean about $4 billion less going into farmers' pockets this season compared with the previous season. Fonterra's Global Dairy Trade Auction Index fell nearly 9% at its latest fortnightly auction, and the average price has fallen more than 34% since the February peak. One analyst who thinks the central bank will move on rates is Bank of New Zealand Head of Market Economics, Stephen Topless. He said he believed they would hike rates this month, but that may be the end of it for a while. He also mentioned that the way to look at both the decline in dairy prices and weak inflation numbers is to recognise that it puts a question mark over continued rate increases by the central bank, and from the other side, when they will stop raising rates. The Reserve Bank has said for some time it was going to raise interest rates by 100 basis points, or 1%, and then see how the economy was reacting. They've already raised rates by 75 basis points, so to be consistent, they need to follow through with the final 25 basis points. The chance of a quarter point increase to 3.5% next week fell to 77% from 93%, ahead of the inflation report, according to swaps data compiled by Bloomberg. Despite the disappointing inflation and dairy numbers, it seems that most analysts expect the central bank to raise rates by 25 basis points at their meeting next week.
Thank you, Andrew. Data higher than expected takes as a good signal for the New Zealand dollar against other currencies, and when the rate is below expectations indicate a negative course for Aussie. Index of manufacturing activity in the Eurozone will continue trading day on Thursday. This index measures the activity level of purchasing managers in the services sector. If the value of the index is about 50 points, then we can talk about good condition in the economy. And if the value is below 50, it's a signal for some unresolved economic problems. In the first hour of trading after the release of the statistics, we can see trade activity in 25-35 points. When data is higher than expectations, it is a positive sign for euro against other currencies and vice versa.